Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to talk about when will the S&P 500 peak. Also, I will talk about the two biggest investing mistakes you should avoid. If you have been following the market, you will know that the S&P 500 and Nasdaq 100 are near their all-time highs. Not too long ago, back in 2022 and early 2023, we were in a large bear market. Most tech stocks such as Apple, Google, Microsoft, Nvidia, Amazon, Meta, and Tesla were down by a lot. Of course, most investors were fear of buying the dip during that time. Now, many investors are fear of missing out on this large bull market. So many investors are getting back into the market now, even though most stocks, especially tech stocks, are overpriced now. The current bull market is largely driven by the largest mega tech companies because they have the largest weights in the S&P 500. The Magnificent Seven stocks, Microsoft, Apple, Nvidia, Amazon, Alphabet, Meta, and Tesla have the biggest impact on the S&P 500 because they have the largest weights and because they make the most profits. For example, right before making this video, Nvidia reported a huge earnings beat and a much better guidance than expected. Nvidia added as much as $250 billion in market value in just one day. Now, Nvidia's market value is near $2 trillion. Because of the enormous demand for generative AI, large language models, Nvidia AI GPUs that are used for AI training and AI inference. If you're an investor, here are the most important questions you should ask. Is the S&P 500 peaking soon, or will the S&P 500 reach new highs this year? So in this video, I will answer these questions by talking about these topics. First, when will the market or the S&P 500 peak? Then I will talk about the two biggest investing mistakes you should avoid. Fear of missing out or FOMO, and fear of buying the dip or what I call FOBD. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing review videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look. Let's start. So when will the market or the S&P 500 peak? I believe the FINRA Margin Debt is one of the best leading indicators that show when the S&P 500 will likely peak. The FINRA Margin Debt shows the total amount of margin debt investors borrow from their brokers. Typically, when you see there's a huge spike in the FINRA Margin Debt, it suggests that there is likely a stock bubble, or stocks are increasing too fast, or stocks are too overvalued. This huge spike in margin debt suggests that many investors are speculating and even gambling in the stock market, crypto market, or other investment assets. Remember the huge stock rally and crypto rally in 2021. The FINRA margin debt increased too fast throughout 2020 and 2021. There are more examples. During the dot-com bubble in the year 2000, you can see that the FINRA margin debt, as represented by this purple line here, spiked very quickly right before the dot-com bubble burst. In 2007, the FINRA margin debt spiked very quickly. This was right before the 2008 global financial crisis. Again, in 2021, the FINRA margin debt spiked very quickly. Many investors max out their margin accounts to speculate in hyper-growth stocks and cryptos because they were fear of missing out. Of course, we know what happened after the Fed started raising interest rates aggressively. FINRA margin debt decreased significantly. The S&P 500 had a huge correction until 2023, and the crypto market also had a huge correction until now. Here's the deal. At the time of making this video, I don't think the market is near the peak yet because the FINRA margin debt is still very low. The FINRA margin debt has not increased very quickly yet, and many investors are still holding a large amount of cash and money market funds. When the market is near the peak, you will see a huge spike in FINRA margin debt. Then it will be a huge red flag because it suggests that the market is overheating too much. So what is the first biggest investment mistake you should avoid during a bull market? During a bull market, I believe the most common or the biggest investment mistake is fear of missing out or FOMO. I'll give you an example here. At the time of making this video, the biggest FOMO stocks are Nvidia, Supermicro, AMD, Palantir, and many other AI related stocks. In my opinion, AI is real. AI is not a fad. AI is the biggest trend that is driving the entire US stock market right now. AI is expected to transform many industries and businesses. AI is expected to open many new markets such as AI robotics and create many new services such as AI chatbots, AI image generators, and AI video generators. OpenAI's ChatGPT is the killer application that started the current AI revolution. Nvidia is benefiting the most from the current AI revolution because Nvidia's AI GPUs are needed to train the most advanced large language models LLMs such as GPT-4 and other AI models such as OpenAI Sora. In fact, according to Nvidia's Jensen Huang, around 16,000 Nvidia AI GPUs were needed to build OpenAI's GPT-4. Nvidia has a near monopoly in the AI GPU and the AI software market. According to many analyst estimates, Nvidia has approximately 90% of the AI chip market. Nvidia's parallel computing software platform called CUDA is the gold standard platform for AI developers and researchers to build their AI models. Almost all the largest tech companies and enterprises, such as Amazon, Microsoft, Google, Meta, Tesla, and X, are buying millions of AI GPUs from Nvidia because they don't want to be left behind in the current AI revolution. They want to build their AI models and become a leader in AI. The next biggest AI breakthrough will be artificial general intelligence or AGI. That's why Nvidia is now worth close to $2 trillion, even surpassing Google and Amazon. Here's the deal. I think it's very important to avoid FOMO and not overpay when you invest in stocks. The market is not always efficient. The market will eventually correct again, and these stocks will eventually become more fairly valued again. There are several steps you can take to avoid FOMO. First, you have to stay away from overhyped and overpriced stocks. This is not easy at all. Investing is an emotional game. You have to stay as rational as possible, especially when we're in a bull market. When you're buying overhyped stocks, they're likely substantially overvalued. In my opinion, it's very risky to invest in overpriced stocks because they will eventually correct if they're substantially overvalued. Second, look for the best businesses that are fairly valued or undervalued, and stay away from speculative businesses. For example, the Magnificent Seven stocks Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta, and Tesla are the best and most profitable businesses in the S&P 500. They are the most competitive companies in their industries. Personally, I would keep buying them whenever they become undervalued. Third, you have to be very patient. You have to wait for the stock to become fairly valued or undervalued before buying it. And fourth, once you have invested in a wonderful business, just buy and hold it for the long term, so your investment can grow exponentially over time. Warren Buffett wrote this in his most recent shareholder letter. The lesson from Coke and Amex or American Express: when you find a truly wonderful business, stick with it. Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable. I'll give you a personal example here. This is from my personal stock portfolios. I also have other portfolios that have almost the same stocks and the same investing strategy as this portfolio. In many of my videos, I always show this stock portfolio to show you my investing strategy over time. This portfolio has done very well over the years because I have invested in some of the best businesses that have great long-term prospects, great management teams, great products and services, large economic moats, increasing earnings, and increasing free cash flows over time. For example, I have invested in Apple, Alphabet, Adobe, Microsoft, AMD, Amazon, ASML, TSMC, Intuit Inc., Nvidia, Meta, Visa, and MasterCard. Some of them have become multi-baggers already. I invested in many of them when they were much more undervalued before. I always buy stocks only when they are fairly valued or better when they're undervalued. A few months ago, when Nvidia was much more undervalued before, I bought back some Nvidia shares when the company was around $1 trillion. Recently, a few days before I started making this video, I decided to increase my position in Nvidia because I believe Nvidia is still slightly undervalued based on my latest intrinsic value calculation here. I believe Nvidia will continue to dominate the AI server market for many years because of the large demand for generative AI applications, large language models, AI software, and AI GPUs that are needed to train AI models such as GPT-4 and OpenAI Sora. Nvidia dominates in both AI hardware and AI software. Based on what I know, Nvidia is at least 10 years ahead of AMD, Intel, and other major competitors, especially in the AI software platform called CUDA. If I'm right about Nvidia, I believe it will be worth a lot more in the long run. So here's my plan. If Nvidia drops well below my interest value, I will continue buying more Nvidia shares over time whenever it's undervalued. And if Nvidia is well above my interest value, I will stay away from it until it's undervalued again. I made a huge mistake selling my Nvidia shares for a quick gain before. Now I'm gradually buying back Nvidia whenever it's undervalued. Here's the second biggest investment mistake you should avoid. This is the opposite of FOMO. I call this fear of buying the dip, or FOBD. Just to give you context, I want to share this with you. Warren Buffett wrote this in his most recent shareholder letter. He basically explained that the market is almost like a casino. Investors are not always rational. In fact, businesses can be mispriced in today's market because of investors' irrational behaviors and casino-like behaviors. Today's investors are often not emotionally stable. The market is not always efficient. This is what Warren Buffett said. Occasionally, markets and the economy will cause stocks and bonds of some large and fundamentally good businesses to be strikingly mispriced. Indeed, markets can and will unpredictably size up or even vanish as they did for 4 months in 1914 and for a few days in 2001. If you believe that American investors are now more stable than in the past, think back to September 2008. Speed of communication and the wonders of technology facilitate instant worldwide paralysis, and we have come a long way since smoke signals. Such instant panics won't happen often, but they will happen. Though the stock market is massively larger than it was in our early years, today's active participants are neither more emotionally stable nor better taught than when I was in school. For whatever reasons, markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants. Here's an important lesson. When the market is down a lot, most investors are too afraid to buy the dip because they are afraid that the market will drop further. So most investors will wait for the market to bottom and recover first before buying stocks again. But here's the problem. It's almost impossible to time the market to find the bottom, so many investors tend to miss out on the opportunities to buy the dip whenever the market is down a lot. Then most investors will only get back into the market after the market has recovered a lot. By then, most stocks are already overvalued or too expensive. I believe the Fear and Greed Index is one of the best tools you can use to find the bottom of the market or the peak of the market. Generally speaking, the best time to buy stocks is when the market is extremely fearful because most stocks are undervalued, and the best time to sell stocks is when the market is very euphoric and excited because most stocks are overvalued. Right now, the market is extremely greedy. Many stocks, especially tech stocks, are overvalued. Personally, I think it's important not to FOMO in this market because many stocks are overvalued. It doesn't make sense to overpay stocks above their intrinsic business values. This is based on my experience investing for many years. Even when the market is very greedy, you can still find some stocks that are undervalued. I'll give you an example here. I always use this intrinsic value spreadsheet to keep track of all the businesses I want to invest in for the long term. When a business I like a lot dips below its intrinsic value, I will keep buying the stock. And if a business I like is well above its intrinsic value, I will stay away from it. Just recently, I bought more Alphabet and Nvidia stocks because I believe they are still undervalued compared to their intrinsic business values. I believe they will be worth much more in the long run. But if a business I like is overvalued, I will stay away from it and wait for it to dip below its intrinsic value before buying it again. For example, I want to buy more Meta, but the stock is above its intrinsic value, so I will stay away from it and wait for it to dip below my intrinsic value before buying it again. This intrinsic value strategy has worked very well for me for many years. If you want this intrinsic value spreadsheet, you can download it from my Patreon blog. I update this spreadsheet almost every week. The link is in the video description. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. I think it's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.